1. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Example, in the late 1990s, many were drawn to the allure of tech stocks and the dot-com bubble. Buffett, however, avoided this sector because he didn't understand it. When the bubble burst, many investors faced significant losses, but Buffett's portfolio remained strong. 2. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Example, Coca-Cola, a company Buffett invested in because of its strong brand and global presence, even if it wasn't the cheapest stock on the market. 3. Our favorite holding period is forever. Example, Berkshire Hathaway's stake in American Express, which has been held since the 1960s, demonstrates the power of long-term investing. 4. If you don't find a way to make money while you sleep, you will work until you die. Example, Buffett's investment in See's Candies, which has consistently provided Berkshire Hathaway with passive income through its profits for decades. 5. The stock market is designed to transfer money from the active to the patient. Example, during the 2008 financial crisis, many panic sold their stocks. Buffett, however, bought more shares of companies he believed in, like Goldman Sachs, profiting when the market eventually recovered. 6. Price is what you pay. Value is what you get. Example, Buffett's acquisition of Geico, which was undervalued at the time but had significant intrinsic value due to its strong business model. 7. Risk comes from not knowing what you're doing. Example, Buffett avoids investing in sectors he doesn't understand, like cryptocurrencies, no matter how popular they might be. 8. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Example, Buffett's transparent handling of the Salomon Brothers scandal in the 1990s, where he took immediate action to address the issues and uphold his reputation. 9. It's only when the tide goes out that you discover who's been swimming naked. Example, during the housing bubble collapse, many banks were exposed for their over-leveraged positions, but Buffett had largely avoided these risky investments. 10. Someone's sitting in the shade today because someone planted a tree a long time ago. Example, Buffett's early investments in companies like Washington Post, which grew exponentially over the decades, providing significant returns. 11. Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Example, during the 2008 financial crisis, Buffett injected $5 billion into Bank of America, seeing an opportunity others missed. This investment has since multiplied in value. 12. The most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Example, in the late 90s, everyone was buying tech stocks. Buffett, however, stuck to his principles and didn't follow the crowd, which paid off when the bubble burst. 13. I always knew I was going to be rich. I don't think I ever doubted it for a minute. Example, Buffett started investing as a teenager, and with his confidence and knowledge, he multiplied his investments even at a young age. 14. Chains of habit are too light to be felt until they are too heavy to be broken. Example, Buffett's disciplined approach to investing, consistently researching and valuing companies rather than following market trends, has been a habit that's brought him success over the decades.